Weekly candle review for July 5th, 2026. Candle score, 58. Cautious recovery. Bitcoin began the week continuing the brutal Q2 slide, briefly touching a fresh 21-month low near $57,800 as the 8-session ETF outflow streak pushed June's outflows to roughly $4.5 billion, the worst monthly total since those products launched in January 2024. By Wednesday morning, BTC was quoted at $58,278. Fortune and the $56,000 to $58,000 band was the line in the sand. The turning point came on Thursday, July 2nd, from two macro signals. First, the June non-farm payrolls print came in at just plus 57,000, half of expectations, with prior months revised down by combined 74,000 jobs. Second, Fed Chair Kevin Warsh told the ECB's Sintra forum the day before that inflation risks have come down, a noticeable walkback from his hawkish June debut. CME FedWatch's odds of a July rate hike dropped sharply. Spot Bitcoin ETFs reacted immediately. $221.72 million of net inflows on Thursday, the largest single-day inflow in roughly 2 months, ended a 10-session, $2.73 billion outflow streak. The bid came from Fidelity's FBTC. BlackRock's IBIT continued to leak. By the long July 4th weekend, Bitcoin had reclaimed $63,000 in thin trading, with XRP up 5% leading the majors. The recovery was real but modest. Bitcoin is still 50% below its October 2025 all-time high of $126,198. Outlook. The week's bounce has the hallmarks of a relief rally inside a still bearish structural regime rather than the start of a new uptrend. The single most important variable to watch remains ETF flow direction. One $221 million green session does not erase 8 straight weeks of IBIT-led redemptions or a minus $4.5 billion June. If the July 2nd inflow repeats in the next several sessions and broadens beyond FBTC, a genuine bottoming process becomes more credible. If outflows resume, the $56,200 to $58,000 support band, tested this week, comes back into play with risk of a flush toward the $50,000 to $53,000 zone cited by 247 Wallst. Near-term catalysts include June CPI on July 15th, the next FOMC on July 28th to 29th, and Q2 corporate earnings season. On the upside, the FHFA's crypto mortgage directive and continued corporate treasury accumulation, despite strategies wobble, provides slow-burn structural support that does not require bullish price action to remain valid. We'll talk again next Monday. Take care.